Welcome. In this video, ZBCN coin hard important rise will come. We will analyze it. Don't forget to like, to subscribe, and please watch to the end to understand. A careful examination of the chart reveals a very promising technical structure at the moment, especially for traders who pay attention to pattern analysis. This structure offers strong and positive clues about the future direction of the market. At the moment, price action is forming a W pattern, which is a common and highly reliable pattern in classical technical analysis. This is a very important structure that indicates that the market psychology is changing, sellers are losing strength, and buyers are preparing to re-engage. Currently, the price is positioned at the second bottom of this pattern and is expected to generate a strong upside reaction from here. The W pattern is named after its resemblance to the letter W in shape and is considered a reversal pattern in technical analysis. It usually appears towards the end of a downtrend and signals that the market may now start a new uptrend after completing its downward movement. In the first leg of this pattern, the price reacts to the upside after making a certain bottom. However, this reaction is usually temporary, and the price retraces again, forming a second bottom. This second bottom is considered one of the most critical regions in technical analysis, because if the price makes a strong upward breakout from this point, it means that the W pattern is complete, and the trend will now turn upwards. Currently, the price is positioned right at this second bottom. This area is considered a reversal zone in technical analysis. At this point, buyers usually step in more strongly. This is because when the price retests its initial low, it means that this level has now become strong support and there are no more sellers left below it. Such tests build confidence in the market. Traders who were hesitant at the first dip will be more likely to take a clearer position after this second test. This leads to increased buying pressure in the market. When the price starts an upward move from the second low, it not only completes the pattern, but also psychologically reassures traders that the market is turning positive again. The second leg of the W pattern is usually more voluminous and stronger. This is because a significant portion of traders have now accepted that the reversal has begun, which leads to increased buying. After this move, the price usually targets the first high. Once that top is breached, the W pattern is complete and the uptrend is technically confirmed. One of the most important aspects of this pattern is the risk-return ratio. The presence of the price at the second bottom offers traders the chance to take positions with low risk. This is because the stop-loss level is usually placed just below this low. If the price starts an upward move, the first target is usually the top of the pattern. This is a very attractive area for potential gains. If the price even breaks through this high, the technical target of the pattern is usually calculated by traveling the distance between the bottom and the top on the upside. This implies a very high probability of gains in the medium term. In terms of investor psychology, such patterns are also very valuable. During the first decline of the W pattern, the market may panic. However, during the second decline, panic gives way to more of a buying opportunity mentality. The upward movement, especially from the second bottom of the pattern, indicates that confidence in the market is being rebuilt and buying positions are gaining strength. This signals that the market may transition to a stable and strong bull trend. The most important thing to watch out for at this point is whether the price will react strongly from the second bottom. If there is an upward bounce from this area and the price manages to break the resistance level at the midpoint of the pattern, it is possible to say that the W pattern is technically complete. But we can't decide the analysis only with the pattern. Let's look at the other metrics. Stay tuned. When evaluating market movements from a technical perspective, there is one structure that is currently quite clearly identifiable and provides strong signals: the ascending channel pattern. This is one of the most reliable trend indicators in technical analysis, which shows that price movements fluctuate steadily in a certain direction. In this type of structure, price movements oscillate between parallel lines with defined upper and lower boundaries. In the current situation, the price is positioned at the lower band of this channel, which represents a critical point for the start of a potential upside move. Ascending channel patterns usually indicate that there is a strong buying bias in the market and that prices are making higher lows and higher highs to the upside over time. The lower band of the channel structure acts as a support line that the price has tested and bounced off many times. This is a critical area where buyers are concentrated, meaning that the downward movement of the price tends to be limited. Prices hitting the lower band usually encounter a buying reaction here and head towards the middle band or higher levels of the channel. In the current situation, the price seems to have touched this important lower support line and found a strong footing here. Being at this level brings many advantages for investors. First of all, the risk-return ratio becomes very attractive. Because the price is in the lower band of the channel, potential downside movement is limited, while upside targets offer much more room. In particular, the start of a move towards the mid-band can be considered as a short to medium-term buying opportunity. Moreover, due to the nature of channel structures, price often tends to move towards the opposite band after a test of one band. So, after contacting the lower band, it is technically reasonable to target the middle band as the next stop. This contact at the lower boundary of the ascending channel also marks an important psychological threshold. This is because many traders follow such patterns and use in-channel movements as a reference in their trading strategies. Therefore, when the price approaches the lower band, buyers are more likely to re-engage. This sets the stage for the price to find strong support and resume its uptrend. In particular, a rise towards the middle band of the channel provides very positive signals about the momentum of the market. Another important detail that should not be overlooked at this point is the continuous nature of the channel pattern. In other words, the movements within the channel are usually not random, but repeat according to certain rules. Once the price hits the lower band, it usually follows a similar pattern in the past, and then heads towards the middle or upper band. This recurring pattern allows traders to predict movements within the channel. This is a great advantage when developing a strategy. Channel patterns are extremely useful not only for short-term trading, but also when analyzing medium and long-term trends. Especially as long as the price sticks to the channel structure, the direction of the trend is maintained. Analyzing the current structure, it is clear that the price is moving both up in direction and regular in structure. This indicates that the market currently has a stable and positive technical backdrop. A price move from this lower band to the middle band is important not only for the realization of technical targets, but also for rebuilding investor confidence. Moves to the mid-band usually bring new buyers into the market. This increases volume and helps sustain the uptrend. If the mid-band is breached, the next target is the upper band, which means that the uptrend can move to the next level. When carefully analyzed on the chart, it is clearly observed that the MACD, the Moving Average Convergence Divergence Indicator, is currently generating very strong and positive signals. The MACD is a highly reliable indicator that is often used in technical analysis to assess the momentum of prices and confirm the direction of the trend. It provides a serious advantage to traders for both short-term buy and sell strategies and medium and long-term trend following. Crossovers on this indicator have the potential to generate signals before price movements and can signal important turning points for traders. Currently, MACD lines are showing a very promising outlook on the chart. In particular, there is an upside crossover between the MACD line and the signal line at the lower levels. This crossover usually indicates that the selling pressure in the market is starting to weaken and buying interest is on the rise. After this point, the MACD lines trended upwards and moved towards the zero level and managed to cross this threshold. In technical analysis, MACD lines breaking above the zero level is one of the most important signs that the market is entering positive momentum and buyers are starting to take control. MAC lines matter. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.